And good day. This is the Elliott Wave weekly update for gold, silver, and platinum being recorded on Saturday, October the 18th at 11:45 a.m. Pacific Daylight Time. I'm going to start here on gold. I'm on my maximum chart. It has been an extremely dynamic week for gold, silver, and platinum. I do believe that in gold and silver that we very likely have reached the high for the minute third waves, putting us in that minute fourth wave position where we have a little bit larger of a correction simply because of the height that the market got to of that push higher that we saw within the fifth wave of that minute third wave. It's been quite the week. It's been exciting to watch. It's been not so easy, but easy to count. Uh, and now I believe that we've reached that high and we started to see those more dramatic turns. Now, again, in silver and in gold, with gold because it's been hitting new all-time highs for quite some time now. Each time it upticks, it's just a new high. But silver pushed this past week to new all-time highs, well above 50. I think silver got up to like 53 and change, and then made a very dramatic turn on Friday right after hitting that high. We saw an immediate drop of just over $4 in silver, which could be signaling that high is going to stay in place for a little while and the market is going to correct. Now, both gold and silver, I do not think that the upside is finished yet. Now, platinum, you're going to see that I'm basically kind of to label that up to a primary degree, I'm putting that this wave may have completed that primary B wave, and I'll get to that when I get to platinum. But if that's the case, we're going to have a little bit of a shift here where platinum may not just follow the other two in just climbing and climbing and climbing, which it also did in a very dramatic fashion last week, hitting highs that have not been seen for many years. So let's get started here with gold. So again, I'm very, very tempted to change this to A and B, but I don't want to give the wrong impression that that makes this whole thing corrective. I think, in my view, I think to really label things above a cycle degree. In other words, it's like I'm labeling it as cycle one, two, three, four, and five, as if it's finishing then a super cycle level. And from what I understand about gold is it does not necessarily do that. That things tend to be more down to a cycle degree, but you do a cycle ABC, and then your next level would be a cycle five down. So, but I'm just going to leave it the way it is for right now. And when the market does decide, when it's done with this very dynamic rally phase that we've been in basically since 1999. To be honest with you, that's kind of when those lows were reached in August of 1999, and so we've just been off to the races pretty much since. No, let's just go over that. Whether it's a 1-2 or whether it's an AB, we're in a five-wave sequence higher, and I am placing it on the primary degree. So we're looking for five waves of primary degree up, of which we have one and two in. And so we're still in that primary third wave. Now, within primary wave three, five waves of intermediate degree, of which we have one and two. So we're in intermediate wave three of primary wave three. And moving up, when from what's going to be inside the intermediate third wave is going to be five waves of minor degree, of which we have one and two. So you can see we are subdividing, at least within this larger wave here, one, two, three times. Now, four we had, but that's the way I think we completed that minute third wave. So let's say we still have subdivided three times, basically, actually four times to get all the way up to where we've gotten. So it just breaks down, breaks down, breaks down, all the way to that sub-minuet level, which is very all crowded up in here. So let's start to bring this down. We're going to bring it down to that 5-year weekly, and you can see there is the minor wave two. Here is the minute wave two. So we have one, two, three 4, and then that very, very dynamic minuet fifth wave up, which basically carried the market from 3,300 to 43.92. 33 to 43, almost $1,100. That was this minuet fifth wave. And it actually, a lot of that came inside the third and then again the fifth. This sub-minuet fifth wave is a straight line weekly. Took a week. Took a week for the market to jump over $200, $270. It was really a very dynamic rally. Okay, bringing it down, let's bring it down to the daily. And so you can see we reached that high and we came down all on the same day. So we reached 43.92, we dropped to 41.96, so almost 200 points, $200. Gold immediately hightailed it out of that high and just kind of came flying down. So that's initially, yeah, sure. You know, a lot of people, even day traders or just swing traders, they realized, oh, that high is much higher than I thought. And they were just getting out of positions maybe that they bought or wanted to take profit on something that they had been holding. So again, there's a lot of that going on. Now, here on the daily, if I'm going to place it in there, this fifth wave did reach, I believe it was 2.618 for this for that fifth wave. And I'm not even going to recapture it because it did pretty much hit it on the nose at 43.92. So, and it consistently was reaching resistance levels. And so once that was done, this completed the third. So that's how that worked going up. So again, there's our labeling. Sub-minuet wave 5 of minuet wave 5 of minute wave 3. Here's our initial calculations, our fib calculations for that minute fourth wave. Now again, we're just going to kind of review quickly what Elliott left for us. Now, how that actually gets into gold, which has a tendency to extend substantially within that fifth wave. So if I'm going to be looking for this whole sequence, this minute fourth wave, to find its terminus, its endpoint within the fourth wave of one lesser degree, well, if I'm looking at minute one lesser degree, is that minuet, and there is the low. There's the box, there's the low, which was 3,300. So again, how this fifth wave up of the minuet degree tacked on that many points, tacked on over $1,000 to the upside. That coming down, we would initially be looking like, well, that's what they're going to take back off of it because we have the potential to come back down to that 3,300 level. Now, we have 0.236 at 37.69. We have previous fourth wave, so even on a smaller degree. So we do have fourth wave support at 4,000. Down to about 39.57 to 58. So those are initial. Now, bringing this even further down, let me put it on this weekly. You can see how this is coming off. Right now, you can kind of say 1, 2 or A, B, and then we got a 1, 2, 3, 4. I think we got a 5. That's initial. If this is 1, 2, and this is all dropping in a third, which would be wave 5 waves down to form minuet wave A of that minute third wave. Wow, boy, you see how when you push these things up, they all just get out of whack, out of the placement because the waves are so extended. Now, let me just kind of bring these over. I get rid of that one. Okay, so 5, 5, and 3. So here, so what really are we kind of putting in here? It really could be the A wave for that minute, or the beginning of the A wave for minute wave 4. So again, that's kind of where I think that the A wave could come to. We can kind of tighten that up a little bit. So if I'm looking here, then we're going to get an A wave down. I think we might get here. Now, again, same thing about that fifth wave. Fifth waves in gold tend to extend to be the larger extended wave versus wave three that we look at in equities and other markets. We think of wave three as being the longest and the strongest. And here in gold, it often is that fifth wave. That is the most common to extend. Now, here we are. If we're coming back up in a small form, we're going to get a wave five and it's going to have some power. What's to say it doesn't drop us down right out of that and bring us down to that around that $4,000 level? I think it is possible. Again, from looking at my hourly chart, see, we came from extreme overbought to not quite, but pushing towards oversold. So I think if we follow our indicators and we follow what the fibs are telling us and we follow what the market is telling us, I think we'll be able to just track this all the way down and realize it's like if we do five down, we're going to get three up. Right now, that is kind of what we're doing. We're going to do have that three up, and you can see what it does to the momentum. It kind of just perks it right up. So if we kind of come down again to start our week, next week, then if we get five down, I'm going to be looking for, it's like this is 1, 2, 3, 4, or it's 1, 2, 3, and this is the fourth with inside this third. And then we get a little bit of a four, a five down, maybe comes in below off 41.96. We get another pop and come back down maybe to 41.45 to complete wave three. And then we come back up and come back down to complete the whole thing. And so the potential for it to come down further is there, obviously. And to come down this far is there. And maybe that is what will form minuet wave A of minute wave 4. Remember, these are kind of the levels that we're looking for eventually for this to get down to. So an A wave down to here, well, yeah, even an A wave down to here, excuse me, these are all possible. So these we have to pay attention to the market. This is 41.98. This is 41.07, 41.05. So not that much more. So we get maybe that the first five down to there. So that's how I'm going to work support. We're going to look for it at these lows initially, and then to the other fib lows for fourth waves until we are entering into that territory of where we think all of this is going to come in. And again, pulling it back out to the daily, we're looking at that fourth, the minuet. And that's pretty far down. So an ABC down, that kind of wipes all that rally out. But it just kind of sets the stage for another dynamic move. So again, I'm not convinced that that's how low the market will get. I know if I'm just following Elliott and the guidelines, that's what we'd start to look for. But I got stronger support also at 236. These rallies were powerful. I just don't think that the circumstance for that powerful rally has disappeared. So there was a lot of underlying support based on the value of gold versus the dollar, the value of gold versus the situations that are happening on a geopolitical level, situations that are happening with our own country. So just many different factors that could continue to support gold because those factors really have not changed. So that I think will also provide some underlying support and it could come in at much higher levels. So 236, sure, that could be the whole fourth wave, bringing it down to 3,800. And that's still a substantial drop off of 43.92. Now you're looking at basically 500 or 400, $500 that this thing gold could drop. That's significant, no matter how you want to look at it. And then turns and goes up in a minute fifth wave, and that's just to complete the minor degree. So you can see we get clusters up here all the way up to the primary degree, which is the highest degree I'm looking for right now. Primary degree, primary 3. So, but first I got to get intermediate 3 in there. So again, what am I looking for? Well, I'm looking for up in here, 5,000. So I think that now we come back in this fourth and our next leg up should carry enough momentum and just power to get us closer to that 5,000 level. We have some additional down below, not just below 5,000, more around the 49.50. So 49.50 to 5,000, I think, is pretty reasonable. And actually, if we have a lot of spill over that. So we start first with the minor degree at 46, 46.50-ish. That's not too far above us, right? So we got up to 43. Maybe we come back down, we go back up. There's a four, we go back up in the minute fifth, which we'll be able to label out once we get that four in. For, put the fibs up. But this minor third, initially 2.882, that's kind of getting up there. And so I'm kind of leaving that one there because the one above it is way up above 5,000. Excuse me, a little bit of a tickle. So putting it all together, I think if I hold it here, where would I think that once we leveled out and put in a low for that minute fourth wave, what are we looking at? I think we're definitely looking at least 46.50, if not to 49.50 to 5,000. And we get that same type of move. Because don't forget, minute fourth, and we're in a minute fifth wave. And we already know that within fifth waves, gold has a tendency to explode. And so that was the minute fifth. Oh, excuse me, the minuet fifth. Sorry. And that one went from 32 to 43. Wow. Getting a little bit of a tickle on my throat. Okay, so gold. Time for correction? Yes, believe so. Parameters given. We have 37.69, and then I can bring it right out of that weekly chart, bring it back down to the daily, and we have 41.68. That is going to be the daily 8. If that breaks, we have the daily 20 at 4,000. And that puts us into this previous fourth. That could also be a level. And if it holds, correction could be over. Again, I'm looking for an ABC down of minuet degree. Minuet A, then a B, then a C. That could bring us down to here. And it might take balance of 2025. I don't know. We're going to have to time it out as best we can. So right now, that was a pretty steep drop that we got right on Friday, right off that high. So I think that's why that was just the announcement we're correcting. I think. If the market decides it's just going to pick up and go because something happens geopolitically, well, yes, then boy, could I say that that fourth wave is coming in and done? I wouldn't want to, but I will never say never. Not in these markets lately. Stranger things, here we are, all time highs. I mean, this is just not new highs since 1980. This is new highs for years, for decades, for long, forever. So here we are. So we'll look for that correction to continue. We have our parameters to the downside. Upside, well, it will be difficult because I have to re-add fibs. I don't think that the minute wave would extend further. This is a very extended fifth. I did have one additional level above it, but we hit it. 2.618 we hit on Friday, pretty much on the nose. So to go further up in that really just pushes the extensions all the way around. But this sub minuet is the one that I'd be watching for. That's why I put the rest up here, because we had exceeded those levels in the minute and the minuet degree a while ago. So it was all how this five waves were going to come through. And when that fifth wave hit 2.618, I'm like, okay, and then dropped. I'm like, okay, I'll label it up and we'll put our parameters down. So work in motion. I'm going to continue to watch it pretty quickly, but let's just figure that you can always count on coming down and use your moving averages on the daily. I'm going to try to just monitor this on the way down and label it out so that we know when we're going to start to go up again. Remember, minuet degree, ABC. Okay, let's go over and take a look at silver. Silver, wow. I mean, talk about dynamic. I'm so sorry, but now my sinuses seem to be running, and so I'm starting to cough. I apologize. Okay, silver, dynamic. Now, on this daily chart, what I want to show is this. These are silver pulling back. That was a big move. This was a very big move. Again, right off that high. That high was 53.76. The low from Friday was 49.66. That, friends, is huge. That's $4.10. $4 in silver. One swing lower. It was very dynamic to me. And I believe that also brought about the fifth, and the third. The subminuet, the minuet, and then the minute third. So pulling this out to our maximum monthly, and let me go like this and then go like this and see if I can't open that up. Come on. So what we really have is that WX, and I'm looking for the Y. I want you to see, look at this here. There's just this explosion. And this is our monthly chart, this explosion on this monthly basis from 45.71 to 53.76. It's a strong $8 move. And really, we can take it from this, because this is the minute third. So that minute third really kicked in, or let's say it began at the end of wave two, which was 27.54. 27.54 to 53.82. Math is pretty easy, right? $26. $26. Wow. I mean, that's dynamic. That is humongous. So again, a lot of factors in. If you really are a silver aficionado and you really are looking at all of this, you're also using the gold silver ratio, which I can't remember, but there was a, uh, a subscriber who brought that up, and I was very grateful because it's something that I don't normally remember, but it's pretty steady. So again, you might want to look into gold silver ratio. And what happens is it gets too far apart to where it gets, back to 1 to 1. So there's that. The wave pattern itself, I have changed. I gave it a lot more room, but I want to show you the alternate that I'm leaving up on the shelf because I just really think that there's more for silver to do accordingly how I'm labeling this. So if I come out here, and let me see if I can just open this up. I mean, here we are. See that X? So I'm looking for this Y wave. There's the A and the B of the Y, and now there's the stem of the Y. So I'm looking for this ABC of intermediate degree, the C waves of intermediate degree. So that's going to be 5 waves of minor degree to fill it. So bringing this down to the 5 year, let's get inside this. I can say this, and trust me, right now it remains an alternate count. Minor 1, minor 2. Originally, I had minor 3 here and minor 4 there, which left all of this in a minor fifth wave up, which guess what? It still could be. So the alternate count is basically saying silver is in a minor fifth wave up to complete the intermediate C wave and the primary degree Y wave. So what could take place after that if we're still using WXY? Then we get another X wave down, and then we get a Z wave going back up. So I'm going to leave that open because what it would suggest is that silver has a much stronger correction now and then just explodes again and eventually moves again to new all-time highs. And because I can't deny that there's analysis, again, kind of going out. Let's see how far. Let me go back to this one and just start to pull it down. You see, I have all the way up that Y wave, which it doesn't necessarily have to be this Y wave, by the way. I just have on a primary degree, I could do wave Y and then a primary, another primary X, and then a primary Z, right? And the Z is going to be up. Oops, I didn't mean to do that. I don't mean to do that. It's up. You're just drawing a Z, right? But we'll do it in reverse. Ding, ding, ding. A Z. And so yeah, well, we can have that. Following this pattern, W, X, Y, X, Z. If the Y wave is going to finish this way, so in other words, also just on this straight level, using that W, that X, where can Y on a primary degree? Well, I got it all the way up to 75. On an intermediate degree, I have it up to 65. So, of importance, let me bring it. Oops, no, I don't want you. I want this one. Bringing it back down on this daily level, here again, inside the minuet fifth wave, we have 5 waves of subminuet degree. Look at where this came. On the nose again. So these fifth waves are meeting fib levels, which tells me there's a lot of traders and a lot of algorithms that are using the fibs and the extended fibs as well, right? Because this is 2.618. This is where wave 5 was 2.618 times the length of wave 1, and it hit it basically on the nose. This high was 53.76. That fib was 53.82. What's 7 cents between friends, right? So I feel that it did complete all the way up to that minute. Puts us into minute wave 4. Well, I want to just show you what it looks like. Because right off the bat, I would say that fourth wave. See what this fourth wave is? Because silver actually within this fifth wave exploded, right? You can see that. 36 to 53. It exploded higher, and it did it in 5 waves. So the fifth wave being the longest and the strongest? Yes. So if I'm going to use a typical Elliott, the guideline that tells me about fourth waves, well, what are we looking for? And that previous fourth, yeah, let me fill it in. Sorry, should have done that to begin with. See where it is? 618, a fourth wave 618? No, I would not be expecting that. I would not call it. So where do I think this fourth wave can come in? Maybe that high, maybe back to 46. I've been kind of using it for a while. But now that I'm in this minute, our fibs setup tell us 382 is 43. That is also very, very possible. Well, what fourth wave does that come into? Just below this one, and really no other, because of the nature of that fifth wave. So I'm going to use 47.60 and then 43.76. So I'm going to take the others out right now. I just wanted to show you how that setup is, which to me just doesn't jive. So again, we're just going to use our fibs. Most common again is 382. So that would suggest 43.75. And that actually where the daily is, it's just below the daily 50. And if we come down hard enough, that daily 50 will just go sideways here. And then we probably can come down and hit it and then get a little bit door and then go back up. And again, what I'm looking for here, folks, is a B, C. Now here we are on our larger, right, or on an hourly chart. 1, 2, A, B. 1, 2, 3, 4, 5. 5. Are we done? Could be. Could be. Not saying we will, Well, let's see. Or is it going to come down in 5 and then 4 is going to be a zigzag? That's my first choice. I, re- I can't say that silver won't turn around and just kind of do a sideways move. But now, because of the nature of how it's coming off, I'm going to look for a zigzag. And it could be a zigzag wave A. There's a lot of things. These things could take their time and spend a lot of time down here, spend a lot of time down here, and just flopping around. It could. But right now, we're just going to monitor it. First stop could be there to there, and then secondary here. And I think this is going to be more likely. 3A2, most common for a fourth wave. And that points to 43.75 eventually. All right, so that is silver. Dynamic, very, very dynamic. Let's go over and take a look at platinum. Platinum is incredible. And I'm going to open this up so we can see how I've got this labeled. Now, this actually comes over here, and this comes over here, and this comes over a little bit so that we're all in alignment. Now, moving out to the maximum monthly chart, what I have just that we finished a primary degree, 5 waves up to here. And I have other long-term charts that I pulled that are not part of Thinkorswim, so I can't display them, but are here to show me that that was a 5. I put a primary degree, which means we're in a primary degree ABC. And again, using the same things where it's very difficult on a cyclical commodity or precious metal, which normally is not going to build on till we have like a super cycle and a grand super cycle degree move in platinum. I think in this case, it really holds pretty steady to a cycle, or at least the primary. Maybe even, as we're seeing this right now. So, bearing all that in mind, 5 waves up, I get an ABC in the opposite direction and a corrective. So, I'm of the primary degree. So, I got a primary A, primary B, looking for a primary C. Platinum is very cyclical. Platinum has specific times of the year when producers move in and buy their allotments to get them through the next year. Uh, this was just because people, I think countries were buying platinum. Platinum is being used in more production of different things now. And I'm not sure if platinum is being used in any of the chip, but I think it might be chips for AI, for example, or just other things. We're seeing a lot of advancement in chips. That could be one reason, and also giving us support. Otherwise, it also is platinum is used in other products, and so I think some of that could have been, coming in and getting what they needed. But this C wave was dynamic. Now, I took a lot of it down because it met pretty much everything up to this level. I have additional levels up, but it was this one in the minor degree that kind of really brought it home for me. And I got to bring this down a notch so we can take a look at it. So I'm going to go and I'm going to take a look at wave 5. And you can see it was dynamic. If I kind of go here and I just put in a 3.618, let's see where that one is. Oh, yeah, you see 3.618, it came in just above it. That's very dynamic for a 5th wave. It was 3.618, 362% the length of minor wave 1. And 3 was very dynamic. And there's 4. And then 5 was very dynamic as well. And it is 1, 2, 3, 4, 5. Now, do I have anything that would suggest we could continue? I do. 1, 2, and then this is And then this is inside the third. 1, 2, 3, 4, 5 of 3. We come back down into 4, which is here. This is 1 week. There you see it in one day. Silver on Friday touched 1762 and got as low as 1617. That's $154. $154. So either this was extremely overbought, and look what happened. It didn't reach. It reached overbought here. Pull back a secondary overbought here. Pulled back, and the last one at the high. You see, lower on the RSI. The strength was weaker each time it ran up and went to a new high. So that reaction fits this reading. So I do, which is why I kind of stuck. These are such a pain. Can we just line them up for me, Thinkorswim? Pull them in as I change the size of the chart. That's okay. I'll do it. So I'm thinking that, again, I'm going to go all the way out to my, at least here, that we're coming down in a primary C wave, which will consist of 5 waves of intermediate degree, which then intermediate wave 1 down will be 5 waves of minor degree. So we did backing it back down, but it kicked off. It kicked off strong down to there. So where do we start to put our fibs? The first one I'm going to do is it comes down to here. So again, how am I going to do that? Well, I'm just going to go from here and put it up to here. Now I'm going to work my fibs. This is for a downside move, right? We almost got to 236. Where's 382? 1426. These are where I think the market can find support as it continues to correct. Previous fourth. So again, where can we look for intermediate wave 1? Maybe the previous fourth, 1321. And then we rally in a 2, we come down in a 3. Where can the 3 come in? Oh, maybe back. And now the C wave should go below here. That's 876. So we got to get 1, 2, 3, 4, 5 coming down. So again, maybe that 1 brings us down here. Maybe it only gets to here. That was one day. So I'm like, okay, this could get weird, and it could get heavy duty. So it's wave 1 down to 1426, and we bounce back to 1560, 50 or 1560 up into here. And then we do a third down to 1300 or 1200, do a 4, and then we do a 5 that could slam us all the way back down to here. And I'd be looking for it to come below that C wave. Again, going out to the max. A, B, C. There's the A. I'd be looking for the C wave to either get down to it or come in below it. So, and what we can do is again go like this. If this indeed completed that B wave, here we have it. And let me just switch this around and go like that and that and this. So now we're showing primary degree, which is what we're working on, the primary C wave. And I don't think I'm needing those. So let's just kind of take that out, that one out. This one I can leave in, 5. Yeah, these I can leave in, that one, and take that out. Yeah, I don't even need 1618. That would be kind of dangerous. So I don't need that one either. Oh, that's on this level. What was I talking about? Oh, yeah. I'm going to get rid of that one since we're talking about how it's going to come down internally. I didn't want to duplicate it. Sorry. Bear with me. Huh. Remove and then remove it again. I just want to look at this for the C wave. See what it does? Look at that. Look at wave 100%. It's so big. That 618 brings us down to here. Let me just put the next level up. What's 786? Oh, let me just use one that I know. I don't know how much platinum uses it. Where's 882? All the way down here, 221. Wow. Wow. So initially, 687 down to 5. And this again was the pandemic. So but you know what? We could have an instance, we could have something that would drive it back down to below there. But right now, fibs are not matching up. We got just way too much in between to save. So I'd be looking just to get below there, but on not that much. But I can't say it won't happen because I'm out on a monthly chart and I don't know how far back I have to go to get platinum prices that low. So I'm actually going to stick with this down to there for that C wave, the primary. Okay. That's actually platinum. I'm going to be keeping a close eye on it. I don't know how many of you actually trade platinum, but it was been wild. And the alternate would be is that there's still a leg or two up to go. And how I would do that, this is on the daily. So even if I say this is 1 and 2, and then 1, 2, 3, 4, 5 to 3, 4, that's only a 3 up. Even that, so maybe I have to consider this 3, this 4, and we got one more shot at it. And if that's the case, then we really do have 1800 to 1911. That would be upside, but I don't think platinum, it can, I mean, it obviously came down much harder than the other gold and silver, but, and it can go up faster and gain more as it gets to these higher levels, just because the demand is high and there aren't any sellers up here. So it can go, just explode 1800, 1900. It can, if this wave is not done. So I think seasonally, we're moving into a period where platinum does kind of relax and come down. Now the C wave, I'm looking for the 5 down to get us below there for sure. So again, I'll monitor it. I'll make adjustments to the count. I'll make adjustment to actually the labeling as well, as necessary. But right now, I think we finished, at least up to the minor fifth and the intermediate C, and we're going to start to come down. And it should come down in 5 waves. All right, that's it. Our next update will be next week, next Saturday.